In this chart, we're looking at the US dollar index with two timeframes side by side. On the left is the weekly chart, and on the right is the daily chart. Both charts highlight the same key price level marked by the horizontal yellow line. Now here's the interesting question. Why did price react so strongly from this level? Was it because of the daily bearish candle marked with the blue arrow, or was it because of the weekly fair value gap marked with the red arrow? Even though both arrows point to the same level, the higher time frame usually tells the real story. Let's start with the weekly chart. The red arrow marks a weekly fair value gap, which is an imbalance created when price moves aggressively in one direction. In this case, price previously moved down quickly, leaving behind an inefficient area where not enough trading occurred. Markets often return to these imbalances to rebalance price. When price finally revisited this weekly gap, it completed that rebalancing process. Now let's look at the daily chart. On the daily time frame, the blue arrow marks a strong bearish candle that formed earlier. This candle represents a local supply area, and traders often watch these candles as potential reaction zones. However, this daily supply sits right inside the weekly fair value gap. So what we're actually seeing is multi-time frame confluence. The weekly imbalance created the larger reason for price to react, while the daily candle simply refined the exact level. Before the move higher, price also dipped slightly below recent lows. This likely triggered sell stops and provided liquidity for larger market participants. After that liquidity was taken, price immediately expanded upward with a strong bullish displacement candle. This sequence is common in many markets. First, price targets a higher time frame imbalance. Second, liquidity below the market is swept. And finally, price rapidly moves in the opposite direction. So in this case, the weekly fair value gap was the primary driver of the reaction, while the daily candle helped refine the entry point. Understanding how different timeframes align like this can give traders a much clearer picture of why price moves the way it does.